Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick pattern and derivative data of Nifty, Bank Nifty as well as the different asset classes. First of all, a general disclaimer. This video is only for education purpose. Please consult your financial advisor before investing and trading. Now let us discuss what we have mentioned in our last video. In our last video, we have mentioned that last week, last week was a truncated week, and we might see Nifty testing, Bank Nifty also testing its lifetime high. So definitely the momentum was positive, and we had a view of buy on dips strategy. Market opened on a positive note, saw some sort of cool off, and started its northward journey. Tested its lifetime high, and on Friday, after the FOMC meeting on Friday, it tested its new high, and then we saw maybe in the during the initial hours of the trading, the selling started, and Nifty and Bank Nifty ended on a negative note. But overall, the trend seems to be positive. Now let us go to the Nifty daily charts, and we'll try to figure out what was the pattern which was formed. Now here you can clearly see Nifty has formed and engulfing bearish pattern on Friday. So definitely the trend seems to be slightly weak at this juncture, but the overall trend remains to be positive. You can clearly see it has tested its lifetime high. It saw selling pressure from the higher levels and ended on a weak note on Friday. But another positive trigger for the markets are that US markets on last Friday has ended on a strong note with almost 450 points gain on Friday. So definitely this could be a positive trigger for the markets in the next week. Yes, the candle is weak in the Nifty, Bank Nifty as well as on Sensex. So if there is a gap up opening on the Monday, initially we might see the fall off selling pressure, but looking at this particular charts and the international markets, I feel or I believe that we might see support coming in at the lower levels. So at this juncture, looking at the international cues and this particular overall larger degree view, I have uh, a view that one should have a buy on dip strategy for the next week. So initially, if Monday market opens on a positive note, one should wait for some cool off and then try to go long at the lower levels. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 22,348. Below that, the second support is placed at 22,259. Third support is placed around 22,079. On the upside, the first resistance is around 22,568. Second resistance is around 794, and the third resistance is around 22,900. So these are the important supports and resistance level in Nifty for the next week. One should watch these levels closely. Should wait for the market to get stabilized near the support zone, and after that, if it starts rallying upside, one should go long, or one should definitely follow the first half an hour to 45 minutes strategy of breaking high and low. So the traders should mark the highs and lows of the first half an hour or 45 minutes, whichever is comfortable to individual traders. And once that either side breakout happens, if it breaks high, go long. If it breaks lows, go short. And do not try to trade for huge swing. Just try to play for half a percent here and there move, but the overall trend remains to be positive. So I believe that next week buy on dip strategy might work very well for the traders. In Nifty calls, you will see on the screen the action was seen in 22,500 calls, then 22,600, 22,700, and 22,800, and almost 22,900 call also. Now here, due to the sharp sell-off on Friday, we have seen that there is a significant drop in the option premium. The implied volatility is between 11.35 and 11.94. It is slightly in a comfort zone. Uh, some strike prices, there is rise in the volumes, rise in the open interest. So definitely, smart money is already into writing the out of the money and at the money calls. So looking at this particular data, we feel that some sort of cool off after a gap up opening on Monday cannot be ruled out, but we might see support coming in at the lower levels. We will try to figure out what could be the prominent support or ideal levels where market might take support, looking at the strike price of Nifty puts. But as of now, looking at this particular data, we feel that 22,500 and 22,600 could act as an immediate resistance. Once Nifty closes or crosses 22,600 decisively supported with strong volumes, then we might see again Nifty rallying towards the level of 22,900. So overall, the data seems to be slightly weak at this juncture, but yes, at lower levels, we feel that support might emerge if there is a cool off in the next week. So friends, now let us discuss the Nifty put data. In Nifty put, the action was seen in 22,400 puts, 22,300 puts, 22,200 puts, and 22,100 puts. Now here you can clearly see there has been a strong open interest, strong rise in the volumes at each strike prices. The option premiums are slightly positive. The implied volatility is between 12.873 and 13.33. It is slightly higher, but not in a danger zone. But definitely the put seems to be highly aggressive. Looking at the rise in the puts, so might be some put buyers might be active at these levels. Now, looking at the particular the concentration of volume and open interest, we feel that 22,400 could act as a very strong support area. If Nifty closes below those area, if it drifts down below 22,400, it closes below those area, then we might see Nifty slipping towards a level of maybe 22,250 to 22,200. But that quite seems to be unlikely. But yes, if the international markets in the coming days see some sort of weakness, then only we might see Nifty slipping towards the level of maybe 22,200 to 22,100 mark. But looking at this data, we feel that if Nifty sees some sort of cool off and if the prices stabilizes around 22,300 mark, that should be the ideal levels where traders can go long. So if there is a gap up opening on Monday, if we see some sort of cool off, let price to get stable. Watch out, the price stability, and again one can apply first half an hour to 45 minutes high low break range strategy, and then one should go long. But any dips should be used as a buying opportunity. So looking at the overall derivative data of Nifty calls and puts, we feel that one should have a buy on dips strategy for the next week. Now, friends, let us discuss the Bank Nifty charts. On Bank Nifty daily charts, you will see on the screen, Bank Nifty has been moving into an upward rising channel since February 2024, and it has maintained. The prices are overlapping. It is classical example of a rising channel. You can clearly see it has exactly tested maybe on Wednesday or Thursday the highs of this particular rising channel and saw some sort of cool off after that. But as I said, the overall trend remains to be positive. You can clearly see there has been no deviation in the primary trend. So again, looking at this, yes, on Friday the candle was weak. So again, as I said, after the gap up opening, we might see some sort of cool off, but I do not believe or I do not see any kind of very aggressive sell off from this juncture. Yes, some sort of cool off cannot be ruled out, but that should be used as a buying opportunity. So now, friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 48,659. Below that, the second support is placed at 48,324. Third support is placed around 48,048. Whereas on the upside, the first resistance is around 49,123. Above that, the second resistance is around 49,607. And third resistance is around 49,974. So these are the crucial supports and resistance level in the Bank Nifty. 50,000 is a psychological mark, so we might see some sort of huge struggle between the bulls and the bears if those levels are tested this week or maybe after maybe next 7 to 8 trading session. But that should be the psychological mark where everybody should watch out those levels. Now, one should the trader should try to just watch out this level, wait for price to get stabilized near the support area, and apply first half an hour to 45 minutes range breakout strategy, and then one should go long after some sort of cool off if seen in the next week. But as I said, the US markets were highly positive or had a positive close, so we might see a gap up opening. One should wait for some cool off and then go long at the lower levels. Now, friends, let us discuss the calls. The action was seen in 49,000 calls, 49,500 calls, and 50,000 calls. Now, here you can see there has been a significant drop or a strong fall in the option premium. Implied volatility is slightly higher. It is between 14.66 to 15.12. There has been a rise in the volumes to particular strike prices, rise in the open interest to particular strike prices. So definitely on immediate basis, 49,000 could act as an immediate resistance. If that is taken out, and if Bank Nifty closes above those levels, then there are chances that Bank Nifty might rally towards 49,500 and almost 49,900 to 50,000 mark in the coming trading sessions. But there has been a drop in the option premium. That means at this particular Friday's data, it seems that the smart money is already into writing the out of the money and at the money calls. So some sort of cool off after a gap up opening cannot be ruled out. So now, friends, let us discuss the Bank Nifty put data. And now in Bank Nifty puts, you can see the action was seen in 48,800 puts, 48,500 puts, and 48,000 puts. Now here you can see the option premiums were slightly positive. Implied volatility is slightly higher. It is between 14.23 and 15.19. At some strike prices, there has been a rise in the volumes. At some strike prices, there is a rise in the open interest. So it is the data seems to be slightly mixed in this juncture. Yes, the Bank Nifty, the change in the option premium are slightly positive. So maybe some sort of smart money might be long in Bank Nifty puts. They might be expecting that Bank Nifty might correct further at this juncture. And looking at this particular data, we feel that 48,800 is the strike price, or that could be the area where if that is defended strongly, then we might see a sharp bounce back in Bank Nifty. But if that is taken out and if Bank Nifty manages to closes below 48,800, then we might see Bank Nifty drifting towards the level of maybe 48,500 mark. But 48,500 seems to be highly strong concentrated area, and where we might see Bank Nifty testing this strong support area, and we might see the bounce back from those particular area. Now, one more thing which I would like to highlight here is you can clearly see in 49,000 puts, there has been a shedding in the open interest. And again, in 48,400, there is a small shedding in the open interest. So again, here you can clearly see that some sort of data is slightly mixed. So I don't think so we might see a very sharp sell-off from this juncture. Yes, after a gap up opening on Monday, we might see some sort of cool off, but that should be used as a buying opportunity. So now if we combine all data of Nifty and Bank Nifty charts as well as the derivative data and the international markets Q, we feel that, or we believe that buy and dip strategy should be used in the next week for successful trading. But one should trade with 6 stop losses. Definitely any dips should be used as a buying opportunity, and we have a view of bullish a trend for the next week also. So definitely at cool off, one should try to go long at the lower levels. Now, friends, let us come to the final segment of our show, which is positional call. I've identified one stock. The name of the stock is Restaurant Brand, which is RBA. Uh, Definitely, the stock has given a breakout from the falling channel, or we can call it a falling wedge. Stock has formed an engulfing bullish pattern at this juncture. It has closed around 105. RSI is also positive. The volumes are also spiked up on Friday. So slowly and gradually, stock is moving after moving out of the selling pressure, and from this juncture, we feel that stock can give a decent return in the coming months. So any dips should be used or can be used as a buying opportunity, or for one should be grabbed as an investment opportunity from these levels. Currently, the closing of the stock has closed around 105 mark. If the stock sees some sort of cool off around 100 mark, that dip should be used as a buying opportunity. So traders, investors, positional traders can buy this stock on dips to 100 levels for an upside target of 120, which is 20% returns from these levels in the next 3 to 4 months. It is a slightly positional call for short to medium term. So definitely stocks looks good for next 2 to 3 months or 4 months investment horizon. Definitely, I would like to repeat, one should buy the stock on dips to 100 for an upside target of 120 in next 2 to 3 months or 4 months time period. So friends, let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.